All right, so welcome to BIC's India Market Review for the week ending 20th March. We're doing the session on 22nd March. And as all of us know, the markets have cooled off a bit. So as usual, let's jump into what we normally discuss, but let's start with this option pane diagram that, you know, all of you I'm sure know Vidya creates grabbing the data from the NSE half copy. So this is the option pane chart as on 16th March, and or let me go back to this. So this is the option pane as it has been for uh, from 16th to 20th on Friday, and you can see that the option pane itself has been at 8,700, which has not come down. It has been constant, but the Nifty has come down, and the Nifty, as we all know, is at around 8,575. So the Nifty is about 125, 150 points below where the option pane is, and the option pane is holding steady there. We've got still another 4 days to expiry. So for me, this is definitely interesting, and those of us who follow the option pane mm, um, analysis, usually the option pane would have moved, according to me, to at least 8650, if not 8600, but it has not done that. So that's bit of an interest, but this could change in the next 4 days. And if we come to this screen, so just to be clear about, sorry, let me go back to this one. So this is the max pain chart for 16th, and if I just go, so every click will go one day next. So this is now the 17th. You will notice that this vertical line that you see here does not move at all, but you will see the left boundary, the red, which is basically your puts, and the right boundary, which is your calls, will shift, and we'll just see the shift that happens. So this is as it was on 16th. I'm clicking and go to the 17th and just notice the red and the blue shift. So you can see that the red shifted very marginally on the 17th. Going to the 18th now. You can see on the 18th both the red and the blue side shifted, indicating that the open interest would have built up both on the puts and call side. And then going to the 19th, you can see that the blue shifted more up and the red shifted down. So let me just go back and just notice that. Okay, so how it's like swiveled to the left was on the center pivot, which means that the puts were getting closed and the calls were getting built up. That was on the 19th, Thursday. And if you go to Friday, you can see on both sides there's been a reduction of the open interest levels on the puts and the calls. So on this, we don't have an overlay of the Nifty. So if you just go back to this, this is what you should imagine, this down move on the Nifty over the last 4 days, and how that has affected the option pane chart. So just to summarize, reduction in OI in the last 2 days, both on the puts and the call side, and the option pane remaining constant at 8,700. Coming to this, so just to put it in context, on the bottom we have the left, here we have the puts, and here we have the calls, and we have the change in puts and change in calls at the bottom. On the top we have the absolute figure for how much the open interest was for the puts, all puts on different strike prices for different dates, right? And on the right side we have it for the calls, the absolute OI for different strike prices. So this is till 20th for the last 1 week, and you can see that as far as the puts are concerned, the top left chart here, I think we can, okay, this is pretty fine. You can very clearly see that with the market at around 8,700, there's good support at 87, but very, very good support at 86, and probably the strongest support is at 8,500. So not much of a difference between 85, 8,600, but 8,500 is excellent support from the put open interest data. Coming to the calls, you can see that the 9,000 is the strongest resistance which is there on the calls open interest, but 8,700 also is pretty strong. And as a matter of fact, if you look at just this bar, 8700 has increased quite a lot, correct? Right? 8700 increased quite a lot on 20th. So there's been a significant increase in the OI on 20th for, okay, so this is 86. So just notice one thing, that the scaling is different for this and this. So it can tend to be little, you have to pay attention to that scaling difference. So we are talking about this change in 8700 where my cursor is, and this is 8600. So there's been a bigger change in 8600 in terms of change, but in terms of levels, 8700, this tick here is a pretty strong resistance. So I'm not saying 86 is not, but I'm saying 87 is a much stronger one, almost double in OI compared to 8600, right? What's interesting and what I was discussing with Vidya is, okay, let me just first say about what's not uh, to be paid attention. Just one second. Yeah, sorry. Uh, on the call side, the thing that I wanted to draw, that I was discussing with Vidya, which I found interesting, is that you have a decrease in the 9,000 call on the 20th, and usually it is the writers who are a lot more proactive, as we know, than the holders of options. And the only way I can explain this decrease in call OI on quite a significant decrease. I mean, yeah, this about a million, decrease in OI, or 80,000 plus or something, 87,000, is that the call holders are squaring off because obviously they're experiencing a loss. And it's interesting because it will normally be the call writers who would, square off. It's a sort of irrational argument to make, because when you have a square off, obviously both sides have to square off, or one side is forced to square off, as we all know. So because for every contract there is a long and a short. But obviously the call, it'll be interesting to maybe have a chart. Don't have it right now, unfortunately. The price of the 9,000 call option and how it would have fallen quite significantly. I would suspect there would have been quite a good bid-ask spread difference, and whoever was squaring it off would be squaring it off at significantly lower prices as the market slipped on Friday. So if I don't know, maybe if we can pull it up later online, will it be available? Yeah, maybe. The chart is not there, no? Okay, unfortunately I don't have Trade Tiger on the system. If somebody has, Balki, if you can put it up, and we'll put it up later, and you can share your screen, you'll see how I want to see the chart, intraday chart over the last, say, 1 week of the 9,000 call option, and how that would have dramatically shifted on Friday. There have been some good lessons, practical lessons in how the bid-ask spread would have changed, right? Because basically the holders would be squaring off quite rapidly, and it's not the writers, as we all know, it would have been in their interest to just hold it to expiry and make the maximum money, but that's not the case. So this is interesting. Coming back to the call side, so 8700 good build up in OI. So quite clearly the market is extremely unlikely to move beyond 88, in my opinion. So forget even 9,000 in the next 1 week of expiry. Coming to the put side, there's been a big decrease in puts. You can see here on 20th on the 8700 strike, also decrease in 8600 strike, and interestingly the 8400 strike. So again, please note that the scaling is very different. There is a difference of a 0, I think, almost, no? So it's like you've got to get that sense of proportion. So the big drop of OI is on the 8700. So the 8700 is giving way, and this is probably where you can see this difference, this between 19th and 20th. This gap here is where the difference is. But the 8600, I think, more or less, there's a small decrease, but more or less quite a strong support, and 8500 extremely strong support. As a matter of fact, 85 you can see has actually increased in the OI a little bit, right? So market, if you go by this data, then we would not expect the market to go below 8500, perhaps 8600 by expiry. and most unlikely to go above 8700 on expiry on the call side. Remember, 8700 is the option pane right now. So below 8700 and perhaps at around 85 or 8600 is where the market would somewhere settle down at, and it will be interesting to see where the option pane moves on Monday, Tuesday, up or down accordingly, right? Okay, so that's the open interest discussion. Are there any questions? So one of the things you could do with this actually on Monday morning is if we go put up the chart, you can see that it's clearly broken the trend line, it's broken the support line, and we have the 50-day moving average right there. Unlikely to take support there, but in terms of I think opportunity, then first of all you can clearly see now lower tops, lower bottoms, and writing the 8700 or 8800 call for expiry this month, next 3-4 days would probably be a good option you could look at. Let's put MSC. What happened? Okay, so this is the NSE India option chain for Nifty, and if you're looking at just go back to the chart, say the 8700 level here or 8800, which is unlikely to be beyond that, and on the downside if you're saying 8600, which to me looks a little risky given that this is where is 8600. 8600 is there. So we have broken that. We are at 8570. 8600 OI came down. Remember that. The next one is 8500 with the OI, put OI remain more or less constant, and that's also where the 50-day moving average is. So basically we're looking at the idea of writing options to make the time value over the next 3-4 days. Writing the 8700 or 8800 call I think is pretty safe, but writing the 8500 put I think has definitely risk in it. Wouldn't be wanting to do that. If you're looking at writing something lower down, maybe 84 is it, even then it could just crack. So forget it. I wouldn't say write the puts. Maybe you can write the calls, 87, 8800 strike. And if you look at the options for that, you're talking about 18 rupees for 8700, and you're talking about 10 rupees for 8800. So you're oh sorry, 25 rupees. My mistake. This was a change in price. 25 rupees, 25.65 for 8700, and 8800 you can see is vastly lower at 8 rupees. If you're looking at 25, you're looking at lot size of 25. You're talking about 625 rupees that can be made on this or probably the next 3-4 days. Of course, on Monday morning this price will be different tomorrow morning, but still, and 8 rupees is not much money at all. I'm not sure how much you'll make after brokerage. It's just 200 rupees in potential income. But yeah, so that's something you could do. Let's see if you could well, I don't know, if somebody wants to do this, which is sell the 8700 call at say 25, 24 or even 20 on Monday morning, and you could also perhaps buy the 8500 put, right? So yeah, all right, so 8500 put here is 21, 22 rupees, and the 8700 call is 25 rupees. So you'll buy the 2700 call, sorry, you will sell the 8700 call and buy the 8500 put. Your net cash flow will be essentially zero, right? And if the market goes down, as I think the markets, the charts are indicating, then you end up making money on the appreciation of the 8500 put from say 20 to maybe 40 bucks, right? So it's a almost net zero cost strategy, and you make money if the market goes down. Or don't do any of that drama, just sell the 8700 call on Monday and just ride it to expiry. You'll probably end up making quite a bit of whatever the full amount. All right. So that's the analysis from the options chain for Nifty. If we look back at the chart, then I think the next support is only at uh, somewhere at 8400 is what I would think. It has to break the 50-day moving average. When once it does that, then 8400 is where it could settle down to. What we clearly have is this now, a downtrend. Can't argue with that, right? And so basically market going more or less as on expected lines as far as the view is concerned, right? So could stop or hesitate at 8500 as of now. That would be the most optimistic scenario in my opinion on towards Thursday. But if that breaks, then I think 83 or 8250 is quite possible. And those of you who are, let me put it this way, even if it does pause here at 8500 coming week, it's quite likely to break down after that, after the expiry is over. So if you look at weekly charts, you will see that we've had a not the previous week, the week before that, very good red candle, and before that you can see that 1, 2, 3 weeks of very hesitating green candles. You've got dojis and hanging men and all, and this on a pretty long-term or a multi-week basis could be counted as a reversal. But note that that happened here also at this point, and the market fell by about 500-600 points, and then it recovered, did a small reversal here, but got quickly bought back. But this time what's interesting is that the trend line has broken, right? So this multi-month, almost 1-year trend line has broken down, and it will be interesting to see how far you could go down to. Very, very good support at 8250. So coming back to daily charts, in terms of doing this as a trade, you could look at if the market hesitates at 8500 because of option pressure from the put writers, and then it breaks down after that, you could look at a horizontal bearish spread wherein you could sell the 8500 call put for this month and buy the 8500 put for April, right? So sell the March 8500, buy the March 8500, sell the March 8500 put and buy the April 8500 put. So you're going to have a horizontal bearish spread, or you want to do a vertical spread, then just go and take the April contracts and buy some put at 8500. So let's see how much that is. So this is all 21 bucks. If we go to April, so the 8500 one is 83 rupees. So effectively you will be short at 60 bucks. That is 1500 rupees is the cost of being short for April. I think it's a worthwhile thing. If it goes to 8250 as the charts are indicating, you're talking about 250 rupees of intrinsic value on this. So you're short at 60 effectively if you do a vertical spread, a horizontal spread, and 250 intrinsic value at least if the market goes to 8250. That's a very good risk reward ratio, 1:4, right? So 250 into 25, you could end up making 6,250 rupees gross if the market goes to 8250 expiry in April. But obviously, if that happens, I wouldn't wait for 4 weeks expiry to 8250 here. I don't think that will happen there. Markets would fall much, much faster. So if you go down at this trend, then this is you're talking about second week of April. If it happened, it probably happened faster than that. So yeah, something to definitely look at. You can clearly see that the red candles are becoming stronger, bigger, Marubozu types, And if you look at the volume, that's the only thing that perhaps is not supportive. But I think in the last 1 or 2 days it has picked up a bit, and there's absolutely no strength in any of the indicators. Don't look at this, it's too short term in my opinion. So it's a 5-day stochastic. If you look at the MACD clearly, and the MACD is slipped into the negative zone, into the -0 level, and then it's going to take some time to settle down in my opinion. So that's the view on the Nifty. Are there any questions? Anyone? We'll have to unmute. Okay, unmute all. Anyone has any questions?
Hello?
Yeah, go ahead.
Yeah, I was just wondering, now the results are mid-April, right?
Results will start coming in mid-April, yeah, second week onwards.
Yeah. So now what would be the only stimuli would be global?
Yeah, so there are absolutely no local positive factors, I think, right? You had the US Fed rate also not being taken positively by India's. So that happened, I think, on Thursday, right? Wednesday night, Thursday. And that was, yeah, this was the day. The market opened up, actually. This is where you need to focus on, right? And through the whole day, everybody was quite optimistic, but till the last 1.5 hours where this collapse happened. So it was at that trend line, and people were okay about it, but then the market sold off. So I think all positive factors that you can think of have been, are not being bought into. As a matter of fact, any up moves are being sold into, right? So right, so that's one thing to really keep in mind. So this is not a buyer's market, it's more a seller's market. There's no doubt about that. And you can look at almost 1 year plus uptrend line being broken down, right? And I would say we haven't looked at the volumes, sorry, the sector indices yet, right? But I would say I think volumes are beginning to up, right? And then there is also horizontal supports that are being broken, and right, if you look like the option and option chain main data clearly indicating downside potential. All right, so next 1 week view, maybe I would say Nifty stops at 8500 till expiry, but after that most probably move down to 8250. So that's the view as of now, and then we discussed what you could do on the option side for that. Any questions?
Musa, there is a head and shoulder in Nifty, which broke down.
Is there a head and shoulder in Nifty? Is Balki's question. So, well, if there is, then it's a pretty odd one, because this would be the left shoulder, right? Correct? That would be.
No, not that one. The next one.
Yes.
Next one.
You're saying this is the left shoulder?
Yeah.
This is the head?
Yeah.
And where's the right shoulder? This teeny weeny thing?
Yeah. Yeah.
I don't know.
The only good news that I've seen in the past 1 week is that insurance thing.
Yeah. So the thing, Valky, about the head and shoulder is like it's difficult to say no, but I would definitely not think it's your ideal one. You just make the chart a little bit cleaner, then maybe you could see it here. This is what you're suggesting, right?
Yeah.
Okay. So if that is the one, let's say that's the neckline, very small right shoulder. Okay, so yeah, looks cleaner here. And if we make this line chart, so yeah, now it looks much better. So you can see that the volume has picked up a little bit, and if you're talking about measuring implications, then we're talking from about say 9,000 to 8,650, whatever, 350 points. So 350 points from 86, you're talking about what, 8,200?
Yeah,
83,
8650.
yeah, 8650 minus 350, 8,300,
Yeah,
right? So which is basically
8250.
yeah. So essentially that's what this chart was also saying, right? In terms of support, when we were looking at, so around that white line zone is where the measuring implication would be. So yeah, sure. The only thing is, the earlier this down move, lower volume, it's only now the volumes are picking up. So breakdown happening, definitely. So I would definitely say, let's put it this way, no buying on dips as of now. Now please note that this is for the overall Nifty, right? Shorting is what we should look at. Okay. Those of you who looked at the IMR for this week, and which one was this? 4th, whatever, right? This would have done the IMR on the 5th or something. I mean, I think we had mentioned there that the 9,000 was probably not going to be crossed. That was also the time we talked about the fundamental valuation of the Nifty and said they were expensive, 23 plus. And we talked about a correction. So go have a look at your notes. And we just took a hypothetical situation about a 15% correction to 7,500 on the Nifty and what that could be. Seems to be that view is sort of playing out. I think I don't know how many of us get this, and I've said this before, but it's worth repeating. When we look at the chart and we come up with, let's say, a potential target of 8250, or let's take us back to 3 weeks back actually. So we are here today, all right? But this is the day I'm talking about, which is a full 3 weeks, 2 weeks back. And what I'm trying to emphasize is, like all of us, I think on the session here, no do theory, candlesticks, indicators. Also, we know some of us and all. What I'm trying to emphasize is when we have a view, and I'm trying to get us back to the view that we created from the analysis we did on, what day was this? 5th or 6th, I think 6th of March. Today we are on the 20th of March. It's a full 2 weeks. It's taken 2 weeks for the market to correct from 9,000 to about 8,000 points, just 400 points, right? Most of us tend to be too fixated either, day to day, intraday, hour by hour, news by news and all, and we tend to forget this longer term perspective that the market actually takes a lot of time to actually play out a certain view that one may have. And if, let us say, one had shorted on Tuesday or Monday after the session, there would have been quite a few sessions where you would have had your doubt. One would have been here where you got a green candle at support, all right, of the trend line. The next day morning would have been a killer because it gapped up, but then it really shot down towards the end. And then even on Thursday, it would have been a test of your confidence, because the Fed got released. They didn't make any announcement, and the market gapped up and opened. I'm sure all of us remember, but it was only in the last 1 hour, both on this day and on this day, that the market corrected. I think Balki was watching the markets. I don't know if others were, right? What I'm trying to emphasize is, once you've got your view, once you've got a sense of your time frames and all, you've got to have the courage to hold on to it resolutely and confidently and let the view play out. So had we, let us say, gone short on the Nifty at around 9,000, today at around 500 points, 400 points less, right, you'd be sitting on how much into 25? You'd be sitting on 10,000 rupees of profit per future lot that you had shorted on the Nifty. But the 10,000 would not, that is the 10,000 today. But in between, you would have seen big profit here and a big dramatic erosion of your profit, mark to market, when it went up. You would have seen the same erosion of your profit here when it gapped up open, and you would have had doubts. I'm trying to use this opportunity not to discuss technical analysis. I'm trying to discuss the psychological side of it, the time frame side of it, and the confidence side of it to get us a sense of, once we have a view, why it is so important to keep that bigger picture perspective in mind. Fundamental ratios going from 23x to 15x or 20x also is not going to happen overnight. Even if you say 23 to 20, you're talking about more than a 10% correction in price. A 10% correction from 9,000 to 8,200, 8,100 is not going to happen in one day. The discussion happens in 10 minutes or in 1 hour or in a 2-hour IMR, but the whole thing takes 1 week, 1 month to play out, and that's what I'm trying to emphasize on, and I hope I'm getting the message across, right? That you've got to have that, you've got to stick to that and be very, 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 very patient and go through the emotional and the mark-to-market ups and downs that will happen hour by hour, right? So I hope I'm getting the message across from a more long-term trading, investing perspective, whether you're doing it on the spot or the derivative side. Yeah. So same way, if you look now at 8,200 or 8,300 as a potential down target, the next 1 week may not do anything. The market might hold with this 50-day moving average and whatever we've seen with Vidya's data on this, that there's very good support at 86, 85 as excellent support, right? So expecting 8,200 to 8,300 in the next 1 week, I think is unreasonable, given this data that we have seen. But let the expiry get over, and then most probably, your option plane will shift downwards and the whole range of resistance and support will shift downwards. And then you've got a much better bet or a probability that in the, say, somewhere first, second week of April or maybe third week of April is where 8,300 will come, right? So you've got to keep that time perspective of 1, 2, 3 weeks, and in the meantime, a strong support at 8,500 for the next 1 week in mind.
Hello.
Okay.
Hello.
Yeah. On the puts. But where is the OI? The price. Okay. So, okay, so Vidya is making a point here that please note that first of all we are looking at the April series here, alright, so we're looking at the April data for the Nifty, and what his point is that he was expecting that the, so the price of the premium prices of the puts for 8,500 should have increased given expectation that the market would have gone down, but as we can see here, actually the the prices have decreased, right, which is a very interesting observation. The calls decreasing here, you can see all the negative, that makes a lot of sense as we all know, but the put OI price is not increasing, right? The put prices for April not increasing, that's definitely a surprise. It's an excellent observation by Vidya, and I don't know, honestly I don't have a no explanation comes to my mind immediately. Okay. Increase. Right. Yeah. So I don't know if Balki, anyone has a suggestion or explanation for this, that would be great. Anyone? That the premiums for puts in April has not gone up, which is a very, very interesting observation.
It's not gone up on Friday?
This is Friday's data, yeah. So even though the market has gone down, as we know, by 63 points down, you can see that the April data for the puts, the premium have also gone down. So, that's definitely it's a very, very good find, and I can't explain this except to say that maybe just decrease in time value, but even then I don't know, maybe you can use some of that Greek calculator to figure this out. but nothing immediately comes to my mind. That's the only reason, yeah. Possible, possible. There's also the possibility of liquidity issues, which is it's only now that the April contracts will start to get actively looked at and traded as expiry happens, and there will be bid-ask spread issues earlier because of liquidity. But now as liquidity comes in, it will find a more normal price for this. So I don't know, interesting. Okay, so anyhow, if anybody has anything, please add. But very interesting things like 8450 has no OI at all, right? 8350 has 75 OI. 8250 has no OI at all, and like the 50s have really bad. So just an observation, and you will see that as the weeks go by, these OIs will start to fill up, gradually. But you can see some. I think this might be of interest to Bobby if he's interested. You'll see you might end up seeing some crazy numbers here because there's no liquidity there. Some wild bid-ask spread. So if anybody wants to do something, I don't know, a little have some fun, and may end up making some money, losing some money. You might want to go sell or go buy the 8250 put for April and go put 2 rupees as your bid price to buy. Some guy might come and sell. You will instantly make money, I'm telling you. Right? So go put orders on Monday morning for 8450 put April, for 8250 put April, 8150 put April, 8050 put April, and put some stupid 2, 3 rupee, 5 rupee price as your buying price. Okay?
It doesn't allow system doesn't allow you to put crazy prices. There is some percentage.
How much? What? But there's no price here. There's no reference here at all. Well, okay, try this on Monday morning and let's see what it says. Because there is no trade here, right? So there's no reference price at all. So when you say the system does not allow us to put, say, plus minus 20%, actually, you know what? It's not that the system doesn't allow us to put. You can put. It's the brokers who put this thing just as a sort of risk measurement thing. And then if for the bigger players, they will actually check. And if they agree with your, see, why should they refuse? It's a risk measurement thing, a risk management thing. That's all. Okay. So, of course, for retail guys like us, they will not oblige. But go, there's no reference price here. So go put and see what we can get out of it, perhaps.
Okay.
Okay.
Yeah.
Yeah. So we'll see what happens. Yeah, but after the market closes, some of these are just crazy numbers. Okay. So actually, just while discussing, Vidya noted this. So look at this 8150 put. Okay. 11 rupees is the bid price. Somebody has put a. I don't know if this data is valid because the markets are closed. This is the bid price. So somebody is willing to buy it at 11.30, but look at the price above and below. This doesn't make sense to look at this also. Look at this, 3 rupees, but above and below is 7 and 10. Look at this. Somebody is willing 5,000, yeah, quantity at 1 rupee 80 paisa, but above you see below 340, above 7. How can this make sense? So it might be a lottery for all you know. These are lottery tickets. If they you should just go. You can't make money in the long term like this, I know. But I think just to have some fun and do some drama on Monday morning, you could go look at this. At least look and learn, if not buy. Yeah, okay. Oh yeah, we are meeting on Monday morning, no? So here's something we can do on Monday morning, mentorship group. Come, remember to put the screen up and see what drama happens on Monday morning. Okay, so we found something to do for the mentorship.
What time you meet tomorrow? What time?
Yeah.
7:30.
Bobby, I wanted to inform you.
So don't get up.
Hello?
7:30, Bobby. Don't get up at 9:30.
Okay, nice one.
Okay. All right. Yeah. Okay. So that's okay. Good analysis. Any questions? Good observation. All thanks to Vidya. Any questions on what you discussed so far? Okay. So broadly, the implications would be start liquidating long portfolios. All right. Now this is from I would say 2 to 4 week perspective. right, till the results come out. And like we discussed in the last, or not last, the 2 week back IMR, I don't think anybody sees a 15-20% increase in EPS in one quarter to justify the 23x valuation that we have right now. Okay, so again, these are broad market-based opinions. Individual stocks could have very different views, as you will see. Or actually, just to, since I know some of us are having it, let me just put up, just to demonstrate. You have to be able to discern between the broad opinion versus the stock specific opinion. Let's look at Adani Power here, right, because some of us are holding it. So if you look at Adani Power, right, big mighty fall from 60 rupees to 47.50, and that's like what, 13 rupees divided by 60. That's a 22% fall from its peak of 60 bucks. So that's definitely not an ordinary fall. Having said that, look at the volume, right? The volume, whenever it went up, it has gone up on dramatically good volume. Whenever it has fallen from the last January, February, it has fallen on dramatically lower volume. And on Friday, there's a potential hammer that got formed here. Okay, and it took support at this 46 rupee thing, which it took support here approximately there, early Feb. And it's been a place of support in May last year. And I'm not saying it can't go to 40. I'm definitely not saying that. But what I'm saying is, when you keep things in perspective, and if you're looking at portfolio building, and this is a weekly chart now of Adani Power, and again to reiterate, I've talked about this massive 2-3 year head and shoulder bottom that is being formed, right? So it almost went up to the neckline, corrected, we'll extend that neckline. The next bounce or reversal of this trade would most probably take it to this neckline and perhaps break out of it. So next time it turns around from here and starts to go up, it probably hit 64, not 60, right? It'll probably go to 64, and that will be a good time to observe and maybe exit the longs if it doesn't break out, but maybe add to the longs if it does break out. All will depend on that time. What I'm saying is that as far as Adani Power is concerned, specifically, right? Again, look at this, look at the volume, and please get a sense of this perspective. I'm trying to, maybe this today's IMR will all be about perspective and time. You can see this very nice consolidation on very nice, low volumes, exactly textbook. Then this rise that you had here on high volumes, and then you can clearly see the fall that has happened on much lower volumes. From a multi-month perspective, and I'm reiterating this, Adani Power's call from a long-term 1 year perspective was 100 plus, right? Now, as far as I'm concerned, the way I look at this from a long-term perspective, this is a buying opportunity. Okay, this is definitely a buying opportunity. On the short term, it is weak. There's absolutely no doubt about it. But from a longer term perspective, there is a potential to buy. Now, from a trader's perspective, you may not want to buy right now, right? But from an investor, an accumulator, and somebody who's willing to hold a position for 6 months to 1 year and take the associated either paper loss or mark-to-market loss on it, I think you're being presented with a potential buying opportunity, right? So that does not mean, please, I'm definitely not saying buy on Monday, right? But I'm saying this is a much better level that has been offered. And if this support holds, and suppose on Monday or Tuesday this goes back up and we have a strong resistance now of 48, 49, or 50, or this zone of around 50 to 52. Once it breaks out of that, you can expect a pretty rapid move. So I would say something like, if you're on the spot side, start accumulating. If you are on the derivatives futures side, then maybe look for some more evidence for the next 1 or 2 days, Monday, Tuesday, to see if this holds, and then get into it on the long side, right? The key here is the big decrease in volume, and this is not just from a 1 week, 1 month perspective. This has consistently happened over the last 3 months, right? So just to highlight how the market view broadly, as we've discussed here, is one thing, but on a stock specific issue it could be something else, right? Any questions? Anyone? Okay, So are we done with the Nifty? Everyone's gone for lunch or what?
No,
All right, fine.
no questions.
Okay, done. So that's the view on I think the overall market. This is a general market view. Let me just. All right. So stock specific.
I had a question. I
Yeah.
just wanted to, probably not related. I was just wondering if you'd be taking a look at the small cap and mid cap indexes.
The stock or the index?
Indexes.
We can look at the indices. That's for sure. No problem.
Because the behavior seems to be. I mean, just take a look at it. The other thing is I've been doing, like I said, a good amount of reading up.
Okay.
And past few months, some of the magazines and different magazines and different online websites of articles, there's build-up of FII interest in small caps. A lot of them think that some good number of large caps are overpriced. So there's money flowing in there.
Okay.
And I really the thing with, like, you always say that the Nifty and the Sensex are like pillars, and when the big pillars move, that it tends to move the entire building.
Yeah.
So I was wondering where the small cap, mid cap, and maybe a sector specific thing falls in that context. Because the first thing I got it, I've seen it and I've experienced it.
Okay.
As a newcomer.
Done. We'll have a look at the mid cap and small cap indices a little more in detail today then. Any other questions?
Okay.
All right. Fine. Great.
The volatility VIX. I mean, just in case, I haven't done the technical indicators, and so I just want to know. And by the way, when is the technical indicators course starting?
I'll come to that at the end. Sometime in April.
Okay.
All right. Okay. Done.
Okay.
Any other questions? Okay. It's 2:10. Is it okay with everyone if we just take a small 10-minute break? So that's the view on the Nifty is basically bearish, as we have seen, and as Balki was just saying in the break, looks like a lot of stocks and maybe sector indices also have head and shoulders on their charts, so we'll have a look at that as we go along. So let's start with our Bank Nifty. Okay, so you should be able to see Bank Nifty on your side. If you can't, please let me know. What you can see is that the Bank Nifty more or less in a sense has a double top, or for that matter maybe we could even say that there is a head and shoulder, as Balki said. Not really a ideal one, but clearly a double top is very much there, and that would be the level that we want to sort of watch out for. And once that breaks, then definitely much lower levels can be expected on the Bank Nifty, maybe even up to 1750 or 17,000 in the short term, and then we'll have to review. So Bank Nifty also showing weakness, and as you can see, in spite of all the Fed thing, the other thing that, like Bobby was saying, insurance bills being passed, a lot of the banks have insurance divisions, remember that. So ICICI Bank, HDFC, etc. Of course they're separate companies, but there'll be stakes in that, cross holdings and all. So this is not helping any positive news, as we've already mentioned. And again, on the indicators you can see that the weakness is definitely there, and it's after quite a long time that the Bank Nifty MACD is below zero. So that definitely says something, in my opinion. And if you look at weekly charts, so banks, as we all know, has quite a good weightage in the Nifty overall, and well, really nothing positive. I think once 18,000 breaks on the Bank Nifty, then perhaps there's even a chance in the multiple weeks of, let's say, the next 2 months of even 16,500, 16,000 levels being possible. I can't rule that out. I think it really depend on what sort of results we start to get in April, right? Okay, so that's the Bank Nifty view. BSE Power, well, BSE Power has done a complete reversal, unfortunately, and in a sense, after this up move, we had a head and shoulder here now. Left shoulder, head, right shoulder, breakdown. And if you look at the potential drop, it's about 150 points from here. So that should take it to almost 2150. And I think that's where more or less where it went. So you can see that the open itself was 2151 and the low was 2134. So BSE Power turned down, maybe support at around 2100, 2050 levels. We'll have to see, right? Okay. In the very long term, however, over let's say the next last mid of 2014 to now, almost 8-9 months, net it's really not done much, the BSE Power side. BSE Realty, so clearly trend lines being broken, big drop on Friday at the 200-day moving average, and once that breaks, then 1600, most probably DLF will be the culprit here. Then CNX IT, so this is interesting. If there is some strength, then quite clearly in the IT space, and I think in last IMR also we had said that IT was one place where there was some strength that was there, but really no hurry should be, there's really no hurry to buy it, just hold on. But it's interesting to see that we had a green candle on Friday, sorry, and the rest of the week was actually not that negative, more or less a sideways move. It's perhaps to do with the US dollar appreciating, and if that strength becomes more, then what the impact could be for IT as a sector. Next, so mid cap. So Bobby was talking about mid cap showing some strength, I think, correct, Bobby? If I heard you right. And you can see that clearly, at least on the CNX mid cap side, it's still very close to the life high. Relatively speaking, the Nifty, Bank Nifty, Power, all what you've seen so far have gone down quite a lot. But the mid cap index has stayed relatively strong and up there without really collapsing the way the rest of the indices have done. There's the Nifty Junior, and that's also more or less close to its life high. So there's definitely a lot of strength there too. Then energy. So interesting that energy has come to support here, 8,300. Actually, energy, as we've been saying, is a mixed bag. I wish there was two separate indices that we had, one for the oil marketing companies and then the other one for the crude oil producing like ONGC and OIL and Kane, because those two indices would more or less go in the opposite direction. So can't read much into this because the CNX energy index consists of both. One is pulling it up, one is pulling it down, and I don't know about weightage, but I think that it doesn't really give us a representative picture of the overall market. Then CNX Infra, okay, not broken down like Realty. Of course, there are two different ones. I just want to extrapolate that. I'm just doing that to see whether that's going to provide support in the future, right? It's near the 200-day moving average, and the 200-day moving average, and if it takes support, then maybe that's where we could look at buy some infrastructure stocks. Otherwise, that's also negative for now. Pharma, wow, so pharma continues to demonstrate strength, definitely staying strong, went sideways on lower volumes and then some little bit of high volume on Friday. Oh yeah, one thing, possible negative crossover on MACD and if that happens, then we could see pharma go down. So again, not a good pattern to buy into, but definitely some amount of strength is a substantial amount of strength, as a matter of fact, is there in pharma when you compare it to the overall Nifty or Sensex. PSU banks. So I think we had mentioned that if the market were to go weak, the banks, PSU banks specifically, were the ones to short. And I don't know if anybody went down that road, but as you can see, once it broke the 200-day moving average, it's been beaten down quite a bit, and I suspect it's going to go down more. We have a sort of nice double bottom here, and it'll be interesting to see whether this holds. Strictly speaking, if I go low versus low, it's broken, but could also be tentative. So we'll watch that, and if CNX, this double bottom breaks, then I think really the next support is only somewhere there, and that will be 3,400, and we are at 3,600. So it's about a 5% correction. Definitely worthwhile from a shorting perspective, from a future side. So of course you don't have the CNX PSU bank futures, but I think PNB Bank or one of those weaker public sector banks are the ones you could look at shorting. Okay, Bobby was asking about VIX. So here is the VIX. So you can see that the VIX has, well, 14.26, nothing really great on that. What you see here is the Nifty. So Nifty goes down. The movement in the VIX has increased. It doesn't tell you much actually. If one has studied how the VIX is constructed, it's basically constructed from the implied volatilities of Nifty options. So we won't get into the details much, but as of now, it looks like, according to at least the data here, the VIX volatility generally is at the lower level. But if you see the range intraday, it's that range has been increasing. The size of these bars has been increasing, as you can see, over the last 4-5 days, indicating that volatilities within a day have increased. This is the Nifty. We've already given the view. So BSE Auto. So one of the things you will probably see, I think, in today's IMR is that many stocks or sectors which were perhaps just holding their head above water at a particular level seem to have collapsed on Friday, right? So good case in point is auto. So 1, 2, 3, 3.5 weeks trying to hold 19,500 but finally capitulated. So BSE Auto has also given way. And then consumer durables, this is definitely showing strength. Thursday tried to go up actually, and still overall definitely not a downtrend. It's a sideways move, and might who knows, even rally up. But I can't think of any things apart from ACs and fridges that get bought now in summer. But that's not really enough to make this whole basket of stocks like Titan, Videocon, Rajesh Exports, Gitanjali, VIP to move up. Then capital goods. So capital goods is coming to a very, very important support line, in my opinion. That one there at 16,800. Just again notice that it was on its way to a life high or a multi-year high of 2008 again, which would be a significant achievement, but it has now come back to the 2010 peak and 2014 peak, and it'll be very interesting to see if this holds or this doesn't hold. And there's also this trend line that we will extrapolate and see how that perhaps provides support. If it does take support here, then I think capital goods could be one place of where you should not lose the opportunity to enter it. Where is that? Just trying to extrapolate this. It's being very elusive. Okay, let's just put that level again. So I'm probably biased on the positive side as far as capital goods are concerned. So I'm just putting these levels here to watch out in the future. So capital goods, I think, uh, is something where support is possible, and I wouldn't aggressively short it at this point until and unless it breaks below 1650. Then I would review. So you can see the collapse of FMCG from the trend line on Friday. It was going down for the last 2 weeks. That trend line was important and has been broken down. So sector after sector breaking important trend lines or supports. Healthcare, more or less like pharma. BSE metals, so our earlier expectation just has been completely belied, this thing that it might break out. Again, lesson to learn is follow the market. Till this resistance zone did not break, it was really going to be a high risk long, and if any of us did that, we've obviously paid a price for it. And right now it's below this resistance and doesn't look like in any form or shape wants to move above that at this point. And if one were to just go by the overall market, then one would say one should be shorting it. Having said that, I would just be a little cautious on the metal side. It didn't make a new low compared to last week. Almost all the other indices did. So some strength could in going down a few weeks. This could be a false breakdown also. It's too early to say. So from a multi-year perspective, please note that you're back at sort of 2005 levels. So 10 years later, you're still not making on the metal stocks. That's really a disaster. But also a multi-year support, 2012, 2014, 13 here, and then so it's at a sort of 50-50 zone. This is the BSE mid cap, and then this is the BSE small cap index, right? So you can see that the BSE small cap index has still not gone back to its 2008 peak, just like the BSE capital goods index. And all this ascending triangle we were talking about, well, it's finally broken down, as we can see. And if you were to take a measuring implication of this, then I would say 11,500 to, let's say, about 10,000. That's 1,500 points from current levels of 11,200. Okay, minus 1,500, so 9,700 is where the market could go to, and this is that level. And if one notice it, then noticed on the left side we have a support or a bottom there. Okay, so that's wow, that's TA for you. We didn't have this on the screen earlier, but as you can see, that's the target, and that is where this could go down. Please note that this ascending triangle took 1, 2, 3, 4, 5, 6 months to form. Please don't expect that the target could be reached in 1 day or 1 week, or for that matter even in 1 month. You're talking about a good 13-14% correction, which in my opinion, it can happen in a day or two sometimes, but I think perhaps it'll take a week or two for it to happen, and then we can review. If there was a small cap index, would have loved to short it. What could drive it up is what Bobby is asking. Well, I have no clue. It's the market that will decide, and actually more important than that is what is driving your question. So, do you already have a bullish bias? Oh, you're talking about what could drive up metals. I mean, I think my answer for anything, whether it's metals or small cap or whatever, we just have to wait for the market to, realize value and then perhaps go up. Otherwise, I don't see any reason right now why it should be going up, right, overall. Okay. There's also, I think, some review of the coal block allotments that came in the news, which is, I don't know whether that's good or bad. Maybe government suspecting of some collusion, I think, by the bidders, but on the other hand, once you announce an open, transparent system like that, and then you're not going to honor it, then that's not good in terms of how the government functions, and you're not honoring your commitments or promises and all that. So yeah, Bobby is asking in terms of economic indicators changes. Well, uh, I don't know if things like industrial production has caught up, if economic growth is actually there on the grassroots. I haven't seen any data or news to that effect, which is strongly indicative of that. So, I mean, things like IIP, Index of Industrial Production, and related things like um, policy. There was a news about, of course, nothing to do with metals, that apparently now from the average of some 2 or 3 kilometers of roads being built per day all across India a few years back, of course, referring to the previous government, now it's like 30 kilometers are being built per day. I don't know, I mean, I saw happened to glance at that. This has nothing to do with metals, of course, but something about, policy being implemented to make actually things go forward. So that there's something else about some 60,000 crore pooling deal to allow for some stuck gas projects to move forward. I don't know if anybody has information on that. All right. So yeah. So across the board, I would say bad news, right? So if you were to put sectors, almost all except IT and pharma have broken down below some important trend lines or supports, right? Definitely not a bullish sign. So I think clearly over the last 2 weeks the markets have become more bearish than bullish, and we have to really watch out for that. And like I said, I think just going back to reiterate that there's no buying on dips as of now, and what we should actually be looking at is shorting. So this point gets revalidated in my opinion, right? Okay. So any questions, any thoughts? So one of the things is, what do you want to do next? Do you want to look at Nifty Junior, or another basket? Tell me. So we now get into the Nifty stocks and see what each one of them has been doing. So starting in an alphabetical order. So what you can see here is ACC, and so what you can see about ACC is that from 1750 doing that tweezer stop that we discussed 4 weeks back, it's come to 1550, and just to refresh your memory, you can see that 1550 is a triple top, quadruple top zone, which was a previous life high. And I keep talking about that view that I have about previous high having to be tested, and I think this is a really good example of that. And you can see on Friday we have a doji, a green candle there, nothing much on volumes as far as the indicators are concerned, showing more weakness, but this is where it is at around 1600. On 1600 would be resistance for the stock, and we'll have to wait and see how it takes support here. So like I said, no buying on dips. As a matter of fact, if it were to say go up to around 1625, you might want to short it. And once, I think a good thing to do would be to short this only below 1525. Let the 100-day moving average break, and once it does that, then 1500, 1570, 1500, 1475 will become really good levels too for targets on the short. As a matter of fact, the high of Friday, or if it opens up on Monday, even at around this 1590, 1600 zone would be a good place to short. Ambuja Cement probably have the same thing. Yep, you can see a very long lower shadow. So some short-term strength I think is there, but and again look at the 100-day moving average there showing a lot of strength. Any move to 260, I think it's 255 now. 260 should be used for shorting. However, you would be very cautious on this with a very long lower shadow. Could be a very big hammer that has been put in place. And if it does recover, then I would say long only above 267, 270. Till then, don't go long on it. Let's have a look at Ultra Tech as we to finish the cement pack. So that's really been behaving very differently from Ambuja ACC for the last several months now. While they were going down, this was going up, and now while those have taken support, this doesn't seem to have taken that much support. And as a matter of fact, I would say that the negative news is negative view is still there. Once it breaks 2800, as a matter of fact, I would put at 2790, 2795, 2800 also as a SLTP entry short with at least 2700 and perhaps 2600 on the target. And on the other hand, even if it does bounce, a bounce to 2950 or even 2975, 3000 might be a good place to short. Definitely no question of buying it. Okay, next coming to Asian Paints. Well, that is holding out 800 quite well, I would say. And if you noticed on all the indices, a lot of breakdown happened on Friday specifically, and I think it's a question of time whether this breaks down or not. And I would say if it breaks down below 788, you should just short Asian Paints. So that with a stop loss at that time at around 816, I would expect 750, maybe even 720, which could take some time, but I would expect that in about 2-3 weeks. The alternative is if it goes towards 850, you want to short it at around 840 with a nice stop loss at around 862 and the target of 800, 805. Axis Bank. So you can see a sort of what do you say? Mirror copy of the Bank Nifty itself. We're talking about the double top sort of formation. It's a question of whether it breaks 550 or not, and once 550 breaks, which I think it will, then at least 523, probably 500 is the next target, and you have a very good stop loss in my opinion around 578. You could even think about buying the 550 put, perhaps a little expensive, but buy the 550 put, or you want to not risk too much money, then you can buy the 500 put. I doubt there'll be much liquidity in that. Bajaj Auto so continues to slip, and one of the things you can see on the weekly chart is that the falling chart has been accompanied by increasing volume and the opening up of the MACD. Right? So from a, I think, multi-week perspective, there is perhaps more pain left. But when you look at the short term, then there's the question as to whether it's going to take support here at around 2000, psychologically important point. It could do that. It already corrected a good 20-25%. This is a fairly reasonable support, but a much stronger support would be at 1825, and if this gets weaker, then I think that's what one would look for. I wouldn't, like I said, be in any hurry to buy anything right now. As a matter of fact, look at any bounces for shorting if it does go up. As soon as it goes below 2000, I think you should just short it. Alternatively, again, you can see the volumes picking up on the red candles by the 2000 put, and I think on this one I would recommend doing the horizontal bearish spread. So sell the 2000 put for March and buy the 2000 put for April, right? So these are just ideas. If somebody can note them down, which you can refine them, especially the mentorship group on Monday, right? So I think Bajaj Auto is horizontal spread to think about trading seriously. horizontal bearish spread. Sorry about this, don't know why. I'll fix this. Keep saying I'll do it later. Bharti Airtel. So big move happened on some news about those telecom options, and it's cooled off, sort of forming a flag. Right. What is surprising me is there seems to be no, or at least I have not seen any news on Reliance Jio and what's happening on that front. So I think overall, as you can see, 2009 to now really not done much, and probably just to stay away from it and leave it for now. But from a trading perspective, this is looking good. 370. This price. 376, and could be a good support and could actually bounce up from here back to 400, but I think it's a sort of iffy situation, and what perhaps would be a better thing to do is buy the 380 call and just hang on to it if you feel that this is bullish, but remember that the overall market is quite bad. So BHEL again 2 weeks going sideways. Friday breaks down, does that on slightly higher volumes. MACD opens up. I would think BHEL is going towards 235, 230 zone, and I would watch out for that. Right, so that's another short, though getting a good stop loss on this is a challenge. BPCL, so BPCL more or less at its life highs actually, and what's that level? 775, going down on lower volumes, as you can clearly see, and I would say that perhaps should not be shorting BPCL, should more be looking at it to form a base to perhaps pick it up for the long term. 700 is a potential support there. With 700 breaks and 650, I would not recommend shorting it. I would recommend going long on it at a lower level. So for now, it's stay away from it. Kane India, interesting. Broke that bottom, this line that we drew, and if we actually take it back, and we had some good lows there that it has actually broken out of. And what's very interesting is that we have an empty red candle, and you have a positive MACD crossover, though it's in the negative zone. So I'm wondering whether there's a base being formed here, but this is weekly, and on the daily you see a green candle on Friday. So potential for a base, I would say just stay away from it again. One of those you don't want to be trading in at this point aggressively. Okay. Then Cipla showing strength. It's cooled off about 30 rupees. Could cool off to 670 if the weakness in the market persists. So that's one thing to be careful of. That weakness could actually be around for some time. Yeah. Okay. Coal India. Very strategically poised at 370. If you go by the overall view on the market, it'll probably break down, but it is consolidating, tight bunching of all the moving averages there, and really not much to say on volumes or on any of the indicators. So I think the best is the wait and watch approach. What you could do with Coal India is do a short strangle, sell the 380 call and the 355 or 360 put for this month, and just wait what it does next. DLF, wow, so why did realty go down so much? DLF didn't go down so much, and this trend line that is there, just strategically poised at that 157 mark, and it's just sitting there. I would say wait and watch. Really a tough call. MACD nothing, RSI nothing, stochastic nothing. Volumes are really low. Good strong support here is potentially possible. I would not go long or short on this, I'd wait and watch. Dr. Reddy's, well, I think you'll see this in all the pharma stocks, which is like showing some strength. Not good to short. On the other hand, don't buy because the overall market is weak and there's really no hurry. Okay, so GAIL on volumes, 370 breaks, then GAIL would definitely go lower to 350. Now, just to go back to the early part of today's session, this is what I mean by having conviction and by just uh, uh, having the resolve, the financial and the emotional courage to hold out. 2 weeks would have done nothing, and then suddenly on Friday it would have given you some nice profits when it fell by what, open 389 and closed at 377. So 12 rupees. It's almost a 3-4% big down move that has happened on GAIL. Then gold. So broke this support line. It's a multi-year line, 2,400. At the University of Mysore talk I gave, I told them don't buy gold now, bad thing. So basically told them like, look, if you're going to get married in a few months or something, might as well save your money now and buy the gold later. You'll get more gold for the same amount of money, essentially, because I don't know how many of us go into gold from an investment perspective. But you can see that this 2011 onwards, 1, 2, 3, 4-year trend line is at threat, and it broke that, just trying to keep its head above that, but I don't think really being very successful. And you've got filled green candles, as you can see, which is again not good news, and that's your downtrend line. So that's the one it'll have to crack. So it'll have to crack two things: one, the 2-month downtrend line, plus the 4 or 5-year resistance line, which is this, which is definitely not going to be easy, right? So yeah, right. So if this happens, if this breaks, it has broken, the next shot on gold is 2,200. It's another about 8% lower, right? So all of us guys whose wives are asking us to buy them gold, well, you can now hopefully show your wife that and postpone your decision. Okay, so Grasim almost came back to its life high, exciting times, but has been beaten down. Interestingly, Friday, doji, green candle, still not time to buy, but it's a good recovery after 8 years of pain, and I would say at lower levels at around maybe 3,500 could be a buying opportunity, or even here at 3,600, but best to wait and watch. Then HCL, oh brilliant. So this has not been so it's got a split and my chart has not corrected for that. Alright, so I just have to move on. HDFC, so HDFC showing strength, there is no doubt about that. So one more stock which is not to be shorted and maybe to be bought at lower levels, maybe at 1,300, 1,250, or even at 1,350, 1,360 it breaks out, then you would buy it, but wait and watch. Have alerts, put triggers. HDFC Bank, interesting. So some Axis Bank is weak, but HDFC Bank is not weak. But then after going sideways for almost 7-8 weeks, one day HDFC Bank could suddenly break this 1040 and go to 1,000. So it's a rectangle right now with about approximately a 70 rupee 7% wide range. Wait for the breakout or the breakdown, then either go long or short respectively, but till then just wait and watch. Hero Motors, interesting. We were talking about a positive divergence, remember that last week, right? So we put this and we spoke about this sort of, it's not a double bottom but a saucer-like formation in the MACD. So Bajaj Auto 10 has continued to go down, but Hero Motors seems to have taken some support at about the 2,600 mark, and I would still wait for some more evidence before I would buy. On the other hand, this could just be a uh, all these long-term moving averages there going to provide a lot of resistance, so definitely no hurry to be getting in. Wait and watch. Maybe 2550, 2500 is where it will go down to, and then maybe we think about buying it. Not yet sure, so wouldn't short it. I would rather short Bajaj, and just watch. Hindalco. So Hindalco has come to this orange line, which is a 2004 level. So almost 12-year, 11-year support resistance zone. So I would again recommend a wait and watch approach. Went down on good volumes and now it is consolidating. Would have to act fast if it goes to, let's say, 126, 120. Yeah, 126. I would immediately short it. On the other hand, this could also be a good place to go long on. It's not clear yet, right? Okay. Hindustan Unilever. So big drop in FMCG index as we saw. HUL, one of the main components of the FMCG index, double top here at around 975, and down nothing substantial on volumes, but down on slightly higher volumes. I would again wait and watch, and perhaps a chance for this market to test 828 again, the previous life high. And if you are convinced about that rationale about resistances, especially important ones, having to be tested as supports at some point, then I think this is as good as any at this point to say short HUL with a stop loss at around 530, and just be very patient till it comes to 845, 830, 835, and then square off your short. That's what one could look at. Okay. Done. ICICI Bank. Thursday was the day to short ICICI Bank, and the reason is on Thursday itself volume had gone up and this trend line had been broken. So if you look at that, that is a very long-term trend line, not very long-term, from 2013 onwards. So like we're talking about a good 2 years trend line which got broken, and you would have had SLTP sell order sitting at around 330. Friday it just collapsed to 316 on quite high volumes. I would use any bounce of this to short this to at least 310, and once 310 goes, then I think 300, 290 are distinct possibilities, right? Having said that, one thing to note about ICICI Bank is that this level of 310, or sorry, 280 will be a multi-year support from 2008. It may not break below that. So the immediate target, worst case, seems to be 280, and we would review, but definitely would look at shorting it on a bounce at any opportunity. IDFC, well, no trading IDFC. I've kept saying buy and do an SIP in IDFC and just keep buying the stock simply because of the IDFC Bank that will get spun off sometime second half of this year. Again, not really coming down substantially, no shorting. Around 162, 163 could perhaps be a good place to buy. IndusInd Bank also showing some quite significant strength, coming back to its old life high of 875. There's no hurry to buy it. Might just crack down for a day or two or a week and go to 820. The next important lower support, I would say, would be, so the level that has really not been tested on IndusInd Bank is this level, I think, 575, and that's quite a long way off from where it is right now. Let's put a trend line, and so if you put this better fitting shorter term trend line, then it has clearly broken that trend line. There's no two ways about it, and it's just a question of time before it goes below this. So I would actually stick my neck out on this one and say you could short IndusInd Bank with a stop loss around 915, and right now it seems a little iffy, but I believe that once this breaks down, which is at around 867, it will quickly go to 834 and then to even 800. So that is IndusInd Bank for you. All right, 800 and then even 750, and like I said, at this 575 zone has not been tested. From a long-term investment portfolio, I would not, so if you're holding IndusInd Bank, I would definitely recommend selling it, and if not shorting, and then wait at some point for it to come to 575, at which point to buy it again. On the other hand, equally valid to say that if you do believe 575 is possible, then you should short it. And I would say a good way to execute that would be to put an SLTP sell order at around 857 and 850, 855, 857, and just wait for that. And that at that time, after that executes, a good, very good stop loss would be 884. First target 800, and then much lower. Infi showing strength. All IT companies showing strength. Nothing in the volumes as such, and definitely some maybe nominal strength in MACD. So really no hurry. Could go to 23, 25, at which point might become a good shot actually. So no hurry right now. We'll just continue with this trend line and see how this behaves in the future. So that's Infosys. ITC, well, breaking down, nothing great on volumes, but then if you're comparing it to this volume, it was already extremely high. So this is what happens when important levels get broken down, like this level of 340, which would have been a multi-year or a multi-month level, right? That's the reason it's thick. And I would say that this stock has to at least do 300. That's almost 9% lower. And if the market gets weaker, I would say 275. So yes, you could short this along with HUL. And first, shorter term stop loss would be at 335, but for somebody with more resolve, then I would say 345. Okay, so that's ITC. Jindal Steel, yeah, so Balki was saying, I think that review of that coal block allocation and all, so not good for Jindal Steel. I don't know if this is the impact on 17th and then again a follow-through impact on 20th. Once this breaks, then Jindal Steel definitely at a lower level. Earlier we were talking about a potential flag breakout that never happened, and these are event risks. Who would have known that the government is trying to review those allotments? So that's just something that you have to live with. On the other hand, could be at a really good support level. From February basis, the price is volume is low, right? Watch out for 150 and then review, and I wouldn't say short this, just track it. Kotak Bank, so one of the biggies doing well. That's also broken the trend line and has done that on marginal, I would say little, okay, just normal volumes, and the trend line is broken. So I think there's a good probability short here with an excellent stop loss around 1365 on the spot, and your first target being 1265. So that's like 100 rupees down, 30 rupees up, 3:1 risk to reward ratio, and I think that's a fairly good probability trade. And if that breaks, then I think 1000 is a distinct possibility. So Kotak, IndusInd, we're talking about a good 10-15% correction. It won't happen in one day, 1 week. You'll have to hold on to it with resolve and write it down. L&T coming back, made a new life high. Weakness still there, very much. I would say it has to come back to at least 1495. It's at 1670. 1495 is the target for L&T. At least 1500, I think. And I would short it with a really good stop loss at around 1730. When I say really good stop loss, what I mean is very unlikely that the market is going to go all the way back there, and the stop loss is unlikely to be hit, right? So 1600, 1550 targets, not in one day, but then look, this is all red candles except this green one and here. So it went from 1875 to 125 rupees. It took 2 weeks to do that. Even if it does that at the at the same rate, you can't expect 1500 even in 2 weeks. It'll take 2.5, 3 weeks to do that, right? So just get some perspective. Lupin making as a matter of fact made a new life high close on Thursday, definitely showing tremendous strength. Looks like a lot of churning in the stock that's happening on Friday. Very high volumes, but not much change in the price. No fresh longs, coming to a psychological mark of 2000 rupees. So you just wait and watch. M&M. So M&M going down on lower volumes, on higher volumes, finally broke down. One of the reasons why the auto index would have just collapsed 2 weeks. So I think if you go back, we were talking about this 1250 resistance zone and how to watch for it. And finally, well, it just broke down. Would have tested your patience, but it broke down, and it did that on higher volumes as we already mentioned. And I think it has the potential to go down further till about 1030 levels. So that's another 30 rupees, perhaps even at 1100, and then we would review. And very good stop loss at around 1194, or you could buy the 1150 put on M&M and just hold on to it, or the 1100 put. So Maruti really not collapsed as of now, definitely showing strength, but wouldn't count on it for too long. So don't short it. Actually, you could set the higher end calls. I would say 3700, 3800 calls could be or should be sold, and I think it would at some point at least test 3400 before we know what else it could do. So wait for that 3400 test before we buy, but till then just wait and watch. NMDC, interesting, broke down, turned back, formed a hanging man. We've come to a good support level, which is now a resistance level, of course, and nothing much on volumes. MACD in the negative zone. This is a short you could track, which is a stop loss at around 135, 136, with the first target of 127, and then if 125 breaks, then I think much lower levels are quite possible, though this support has become a little stronger now, and we'll just have to wait and watch. Okay. VIX we did. NTPC, whoa, gap down, huge, big volumes too. So went up here on big volumes, some I think news, then I don't know what happened, and then suddenly it's back down. Pretty volatile. Double top at 160 zone, gap down. Any up move should be used for shorting. Wonder whether this is purely a technical driven stock. Bounced from the 200-day moving average, and once it breaks that, it will probably go to 135. I just say, given the volatility and the big volumes on this, both up or down, I would perhaps prefer to stay away rather than jump into NTPC. ONGC, so forming a good support at 308 levels, as you can see, and the question is whether that breaks down or doesn't break down. You should actually look at the crude oil chart and have a view on crude oil, and then you'll be able to be in a much better position to be able to decide whether you want to short ONGC or not, right? Okay. That support pretty important at around 300, so watch for that. Otherwise, those of us who want to take some risk, you could either buy the 310 or the 300 put for April, and then just hold on. But clearly now forming a base, low volumes, MACD crossover, just that maybe it's definitely a premature time to buy. Could actually just be consolidating before it moves down again. really big move could come only if it breaks below, say 295, 294. PNB, alright, so 160 forming good support. As a matter of fact, on Friday it took a lot of support there, and definitely a healthy amount of positive divergence. So this is interesting. So you've got bullish divergence, MACD is clearly turned up, RSI has clearly turned up, stochastic, even though it is short term, has clearly turned up, and the stock is more or less at the same level. Let's look at the weekly chart. So still some weakness on weekly, but this is surprising. So we're looking for stocks to the PSU bank side to be able to short, and I was thinking about PNB, but PNB actually might be a forming a base at which it might actually be a good place to buy. But plenty of resistances on top, so good time to buy would be only actually above 172, 173. Actually, from an investor's perspective, above 185, 190. From a trader's perspective, if you're a contrarian, then you could look at buying this as close to 161 as possible, and you will have a very nice tight stop loss at around 157, 158. But you'll probably have to have a lot of patience. Having said that, with the overall weakness in the market, this is a low probability trade in terms of profits, and 157 breaks and very quickly 145. Actually, alternatively, what you could do is if you have a directional view on this, which is difficult to justify as far as the chart is concerned, if you have a directional view, then you could also buy the 160 put for April, or you don't have a directional view, of course that's a bearish view, you could just buy the 160 long straddle, buy the 160 put and the 160 call, and then just wait, and along with that you could sell the 185 call, and I think that will reduce your cost of your long quite a bit. I would even go to the extent of saying you could look at a ratio right of 185, 190 calls, multiple lots. Only problem is I think liquidity will be a big issue. Power grid, okay. Interesting. Still would say higher tops, higher bottoms potentially. We'll have to see what this does in the days ahead. So that will be tough to okay. I'd say wait, buy it above 152, otherwise just wait and watch. Reliance, 850 potentially forming a base, looks like, but downtrend is still there. Okay, that's the downtrend line you want to keep a track of, and just going back to a very important adage of tenet rather of Doe theory. Once the trend is in place, assume it is there till such time that you have confirmed evidence that that trend has been reversed. There is absolutely no indication at this point that it's reversed. So wait and watch. State Bank of India. So this is one reason why the PSU banks have gone down. PNB is taking support, but SBI is not. Remember that there's this big rights issue on SBI coming up, and we had mentioned about the sort of selling pressure effect of that. And I would say if 275 breaks, then you want to short it probably till 250, and you could do any bounce till about 290 to short it. It's going to take some time to break this, probably not this expiry, next expiry, and before it goes to 250 in my opinion. Now, okay, showing some resilience now. Too early to say how this will pan out. Okay. SSLT, Well, I think SSLT can definitely be shorted. Going down on higher volumes, I think 175 is the next target. Very good stop loss at around 197, 10 rupees up, and about 12 rupees down. I think great actually. No, okay. If 175 breaks, then this is the new merged company, Sterlite, Goa sort of thing. So really no history beyond this. Could go down, if 175 breaks, could go down in 5 rupee chunks, much lower. Sun Pharma, so I think that continues to just do well. You have a very nice tweezers top there, right? So watch for this tweezers top. If tweezers top holds, then Sun Pharma I think is at least till 1000. Yeah, from a strictly trading perspective, any bounce on Sun Pharma, short it to 1000, 1010. If that breaks, then further shorts to 965. Tata Motors, so broken out of that rectangle, or rather triangle, sorry. Not yet met the measuring implication. I think the measuring implication was something close to 500 if I remember. What was it? 610 to 540, 60 rupees, 520. 520 is the measuring implication. Alright, so 2 weeks of sidewards move after breaking down. Then we have a doji on Friday. Slightly higher volumes, no strength in indicators. I think 520 will happen. You could short this with a nice stop loss around 556. It's 547, so that's about 12 rupees up, and 520, 510 on the lower target. Tata Motors, yes. Tata Power. Okay, so Tata Power dilly-dallying with that 80 rupee mark. Okay. I would say I think just stay away from it for now. A lot of volatility as you can see in the last several months. This is weekly chart between 80 and 90, 80 and 90. It's sort of been range bound for 1, 2, 3, 4 months, and if it breaks down, then I think 70 is a distinct possibility. Those who want could take a shot on this with a stop loss around 83, 84. First target 75, next target would be 70. Okay. Tata Steel. Okay. Very important support level at around 330. Okay, multi-year 10-year support, that is just like Hindalco sitting on a 10-year support, but it looks like it's going to break down in my opinion, though there is a massive sort of bullish divergence which is there. So looking at metals, I'm just beginning to think that they could have come to very important support levels from which they may be forming a base. Too early to say buy. From a trader's perspective, it will still be a sell, right? Interesting pattern. Does anybody know what that pattern is? Let's see how many of you still awake on Sunday afternoon. Yep.
Vomiting camel.
Definitely not, Madhu. Yeah, Bobby has it right, Balki has it right. That's a falling wedge, and we know the implications of that, don't we? Only thing is, there's nothing about volumes, but falling wedge, if a breakout happens, you must buy this very quickly. So this is really interesting. This is a falling wedge, I would agree. It's taking 3-4 months, and Well, I would say definitely no shorting Tata Steel, or for that matter, I think even Hindalco. Just track this falling wedge, and once it breaks above 350, I think one should just buy it. Or if you want to be a punter and take higher risk, I would say even buy it now and then just hang on to your pants, because it's probably going to give you a wild ride. Safer would be to buy it above 350 on good volumes. It would rapidly rise to 400. After that, again, you want to do it in the spot, or you want to do it in the futures, or options, up to you. Or you could buy the 350 call for April, right? So here's,
I have a question.
one sec. So here's a bullish spread that you could do, or a horizontal spread for April. You could look at selling the 320 or 330 call for March and buy the 330 call for April. That's one thing you could do. Alternatively, you could buy the 330 call for April and sell the 380 or 360 call for April, and you'd have a vertical spread, right? So think about that. The thing is about a falling wedge, as soon as it breaks out, then you can get a up move which could go on for many weeks or months sometimes. Yeah, Bobby, go ahead.
See, one of the things I wanted to, because like, the markets are generally shaky and weak and we're expecting results. So I was just wondering, besides Tata Steel, I'm tracking stocks like TD Power. So now the question of when is it time to buy? Has the markets turned around? Because if you look at the Sensex and the Nifty and looking at the bigger picture, things are not that steady. But if you look at an individual stock, it might have reached a very strong support, or like you said, a falling wedge. So in these kind, like the bigger picture kind of doesn't really support the buying, but there are like this falling wedge or even a strong support for some other stocks. So I mean, what should a person do, I suppose, in this?
I think that's a function of each person's aggressiveness. I mean, if you are aggressive, then you might want to, start nibbling and buying long now. It's a question of, I think, aggressiveness, conviction, risk appetite, capital, time horizons. Are you looking for the next few days, weeks, or versus months, years? I think that's the question. You answer those questions, and I think it's easier. From a pure technical perspective, it would be you need to wait for that confirmatory breakout to happen to say I want to buy it, right? Or as far as stocks which are at support levels are concerned, then the opposing thing is that at support you could buy it and you could have an excellent risk tolerance, because excellent stop losses, so your losses could be very, very minimal if it breaks down, and if it goes up your rewards could be quite substantial. But then you're not getting a technical breakout yet, confirmatory signal, or of any type, either trendline breakout or morning star or something that says this is the time. The flip side of that, and that's where I'm talking about the opposing ideas, is that you wait for the confirmation you're going to have to give up certain profits, and then only you're buying. So I mean, every trader, every investor has to make this fundamental call: which side, at support or after breakout, at trend line or after breakout, at this falling wedge here or after breakout. Do you want to buy it now at around 330, or do you want to buy it at 355? You're talking about already a 20 rupee 8% move, right? The risk of buying you could buy it here, for example, and put a stop loss very tight at around 320, 317. On the other hand, at this point the chance of the stop loss being hit is high, but the amount of loss is low. On the other hand, if you say I want to break out, then you have to wait for an 8% up move on high volume, then you're losing that 8% essentially. So you can't have both. Or you sort of nibble and say, okay, let me buy some now and I'll wait. So this is where it comes to managing your portfolio, the size of your funds, position sizing, and things like that.
Okay, let me put it this way. Now, assuming it breaks out at 350, but the markets are still shaky. What do you do? I mean, technically, it's giving an indication. This specific stock. Basically, what I'm asking is, there'll be situations where now I understood that now it's reached based on your aggressiveness in your individual situation and choosing, your decision can vary. Yeah. Now, what I'm saying is, is it very possible that stocks can, it's it might even be unlikely, but there is possibility that certain stocks can buck the trend. Even the markets are shaky, they can still.
Yeah. That will always be there. I mean, you are seeing the pharma stocks, they're bucking the trend, no?
Okay.
That will always be the case. No matter
If I
what,
believe in the
no
stock,
matter what the overall market is doing, there will be some stocks doing the exact opposite on good strength.
okay.
Yeah.
Okay.
All right. Good. Anyone else? Any questions? Okay. So Tata Steel falling wedge. So no shorting. Prepare to either buy here or wait for the breakout and then go long on that. Weekly chart. Yep. Weekly chart also. Even if you were to refine this, wedge is even more, apparent. Yep. I would say there's a wedge there. Interesting find. I was completely not expecting this. TCS, okay. So TCS breakout happened of this descending triangle, but of course target not met. Essentially went back to its life high, double top there, and has come back down on lower volumes, as you will note. And the last 2 days again volume picking up on the upside. So this is definitely interesting. So the IT pharma showing strength, and metals showing some sort of base formation. Everything else, however, is quite clearly negative. Tech Mahindra, sorry. Okay, I'll just have to review this later. And then, so Ultratech we finished. Wipro, wow, what a candle. So what was the news on Wipro? There was some news, I missed it. There's this big window which has not been closed, please note. So at some point 560 is a possibility. Okay, nothing great on volumes, but some news happened on Wipro I think yesterday. Okay, and Z, okay, so Z, low volume, nothing great. Okay, 350, good support. I would stay away from it. And I think we've done that, right? Yep. Okay, so good. So let's just make some notes. So in the meantime, Madhu, you had a list of stocks, so we could just post them, and if anybody else has any questions, let's discuss. So Tata Steel, I think today's big find, falling wedge. Okay, as far as I'm concerned, what a surprise. So metals, potential base formation going on. No shorting. It's an early high risk buy. Right, pharma and IT showing clear strength, though I think there are some which are not in pharma. Which stock was that with tweezer stop? Somebody remember? All other stocks and indices, sector indices have broken important levels and should be shorted as discussed. Alright, so that's the view on the Nifty stocks and the indices as of now. We'll take specific stocks now and go from there, right? Okay, so before we get into those individual stocks, Madhu's request, does anyone have any questions? Anything, any comments? Alright, so let's take Madhuson first. Okay, so Madhuson Sumi made a new life high sometime back, beginning to show some weakness, but I think the long-term trend is very much intact. There's absolutely no doubt about that. 550 psychological mark, going to be a resistance for some time in my opinion. but coming down, I think, on relatively low volumes, could come down to all the way to 470, 465, and I think, see again, one has to be clear as to what exit rules one is going to have. As far as Motherson Sumi is concerned, I'll just put it in a context. As far as Motherson Sumi is concerned, I would say you either have to decide that 500 is a very good resistance, it's not going to break out for some time, and you'd rather take your profits and sit on cash or put them somewhere else, or you have to say, I will wait for this trend line to break, and that means 465. So you have to be willing to lose about 10% of the current price and then only exit. There are no two ways. Or you could do the following, where you could liquidate or sell off some now and block in a certain amount of profit and keep the rest and just wait and watch. If the overall market was very bullish, I would have said hold on to all of them, but given that there's overall weakness in the market, I would say be cautious and just track. At the very least, I would be exiting below 460 my entire Motherson Sumi holdings, right? So that's on Motherson. Ashok Leland. Alright, so Ashok Leland clearly forming a rounding top. Very, very importantly positioned with the rounding top and the trend line and the support line. If it breaks below 66, it's at 69. That's 5% down move. Then I think it could come down all the way to 60. So it's just at that trend line, right? See, at the issue with trend lines and all that is clearly that when something happens, you don't know whether that it's definitive. And what I mean by that is just pointing out to two levels here. One is at this zone, mid-December last, and this February, where it sort of went to trend line or even went below that, but then the next day or 2 days later recovered, right? So that's the view, technical, that I would take as far as Ashok Leland is concerned. Bharat Forge. Whoa, I haven't seen this for a long time. It's really gone off somewhere else. Look at that trend line. Shouldn't be there. So I know this is Madhu's request, but Bobby, I hope you bought some of this. I think you were gung-ho about forgings a couple of months back or a few months back, right? So you can see what happened.
August, when I first started it, I was this Kalyani Forge. Since I've done some reading up on casting and forging, I'll just put out some names out there so that if anyone is interested. Alicon Castalloy, Investment and Precisions, Investment and Prec. The other is Kalyani Forge and MM Forging also. This is something, I was new to the markets, and everything, the only thing that held me back was, I was new to it. I definitely bought it because if I had even just like half of what reading up I had done on defense at that time, this is just, I'm new to this and all that, but I would say that if at some point in time we go through a bearish phase, buy Bharat Forge in bulk, because everything like that indicates in terms of manufacturing, and as long as the government doesn't give hat in terms of, as long as it's what they're saying is not just absolute BS, just in terms of the ability that a lot of these guys have proven. When I'm saying proven is a lot of them have already, a lot of the foreign companies have tied up with them. There are foreign aerospace guys coming in and trying to set up their marketing environment here. So there are changes there now. If it really takes off, then you would really regret. And I'm saying this over because a lot of these manufacturing changes, it's not like IT where you can just come, set up shop, hire people. It will take time. Right. But once it gains a certain momentum and it reaches a tipping point, you should really get into it.
All right.
But maybe not right now.
So what time frames are we talking about here?
I would say 3 years, 3 to 4 years in terms of manufacturing, all these guys, no?
Okay.
Bharat Forge, Alicon Castalloy, investment in precision. Investment in Trek is one good. I like the small time guys who can zoom.
Okay.
So aerospace, I bought that magazine and I'd already done some reading. I'll probably share it with you later.
Sure.
The thing to keep in mind here is that a lot of these things are, you see, a lot of these defense and all these things, they don't, unlike IT, they can't really come up and publicize it openly because a lot of it is government related. Okay, now the one good step just yesterday, day before I read is that now India is going to ban import of certain things.
Okay.
They're putting, and that's a very valid. I mean, if you can do that, that means at least your intentions are manifesting in terms of we really want to make things here. Before Pipavav was Reliance had taken that stake in Pipavav, there was an article. A day or two before that, I read one article by Anil Ambani. He spoke with Modi, and that's why they're getting into defense, and he put one sentimental angle and all to it. So, okay. Long story short, keep an eye on it over the next 3 years, definitely.
Got it. All right, great. Thank you. So the view on Bharat Forge, I think, is very simple. From a technical perspective, you would sell below 1210, 1200. But I think like Bobby has put it out so well, if you're going to look at it from the next 3-year perspective, I would say, hold on to it for sure. Technically, I think if it goes below 1200, then very good possibility it will come to 1100, at which point you could buy it again. But at this point, really no need to sell it. And again, coming back to what Bobby was saying, this is a good example of a stock which is holding out excellent strength in spite of a weak market. So specific stocks, if you go specific stock specific wise, you will always find stories which are completely doing the opposite of the overall market. Right? Okay, then okay, Bharat Forge, then Triveni turbines. So I hope tree turbine, no? So I hope this is the one. Looks like Li-Fi. Yep. One more of Bobby's finds. Triveni turbines clearly going. What do these guys make here? What turbines? What type?
This wind turbines and power sector related.
Yeah, but there's more to it than this.
I wanted to.
There's something more to this.
See, the thing here, I wanted to buy it.
Sorry, go ahead.
Yeah. See that I want to buy it around 118, 120. Okay. But then the market was like, this is the thing, like this was an exception, I guess, right? Because
What do you mean by exception?
I really wasn't sure whether it'd go up. I don't know how you can decide the strength of that stock. I mean,
well, very simple. I mean, there are tools to do that. Let's not get into that. There are mathematics also you can do that to decide the strength of a stock. But technically, you can clearly see it's going up and the market's going down. What else?
okay.
Right. Okay. So, yeah. So this is an excellent buy. I would say 150 psychological mark, hit that, went up on higher volumes as you can see over the last 3-4 days, and yeah, it's at 130 now. Any cool off on this should be bought, I would say. Right. Only thing is that it was at 100 sometime middle of last year. It's gone up by 50%. Tends to do these things of going in stepwise fashion. Jumps a lot, goes sideways, jumps a lot, goes sideways for months, and then suddenly the jump happens again. Right? Okay, so this is good. Then TD Power Systems, huh?
Yeah.
Alright, so that's going somewhere else. Okay, clearly downtrend. No doubt about it at all. And it's breaking important supports also. So 350 broke, 400 broke.
It's broken it or?
Yeah, it's broken, clearly.
320, around 315, between 315 and 320 is what I was looking at. I don't know.
And it went down on Friday on higher volumes. So TD Power went to 470 and early this year, and basically it's been just going down after that. I would say somewhere here is potential support, not potential, there is support around that zone. Yeah, this is the whole life charter. All right, so
So
310 at least.
at what level?
I would say at least 310. You've got to wait for it. Then around 300, there's a good cluster of support, and then we will have to review. But last week has been a pretty bad big week, as you can see. Big red candle, slightly higher volumes, but some bulk thing happened.
They are winding up one part of the business.
They are winding up, is it?
They are winding up in they have three businesses. One of them is EPC. They're winding up one portion and focusing on their exports because the main driver is doing well, and so they putting in more effort.
Yeah, but then if you're winding up one part of a business, you're releasing capital, and usually that's good for the stock. I don't know. I'm not saying there's something. It could just be pure sentimental, technical sell-off that's happening. You never know. But if you're trying to put a fundamental explanation to it, then winding up of a business usually makes the stock go up. So unless there's some,
the last results were not up to the mark.
okay.
The previous quarter. That's when the fall started.
Okay.
But the reason they had specifically read the reports that the reason the results were not bad is because they're not expanding that portion of the business, and they're just trying to finish up what they have and move focus on what their strengths are. So I'm expecting it to turn around. I'm hoping around 310, 315 like that.
Okay, so I think you wait and watch. It's too early, and maybe at some level. It could even go as low as 250 if things get bad. That's still easy.
I was just yeah. See, the thing is, now this is my mind. In a way, it could be playing tricks, but like in a market like this, I would expect that it would hit some kind of a support and probably consolidate, because that's been the pattern between last year, right? It's gone through a consolidation phase. So possibilities. It could, and if things get better, it can zoom up again, because it seems to be the nature. Even the candles are like really long. So
see, the thing about markets or any stock is that you've got to be prepared for any outcome, right? We always have biases for every stock and every story, in favor, against it, and neutral. It's very, very difficult. Not difficult. I think the honest thing is to say it's impossible to avoid the bias. What is good is to be aware of the bias, and then to know that the bias is going to, sorry for the bad choice of words, the bias is going to bias you in a certain way, and that way is not necessarily the right way, right? As far as making money is concerned, you might like the stock, you might like the story, you might have invested a lot of time and effort and sleepless nights on it, but that doesn't mean that's the stock to buy, right? So this is something that tends to happen emotionally, psychologically, and all. Bottom line is we are here to make money. So at this point, if you were to ask me, then I would say clearly wait and watch. The downside seems to be getting sharper at this point. So to say that there would be consolidation at 300 is premature. Let the consolidation happen, then we'll say, right? What's very clear right now is that the downside forces have seemed to have increased, and I would say as far as Friday is concerned, the volume you can clearly see, even for Thursday, Friday, it's started to go up. So there's like good amount of selling that's going on. And just follow the market, since I'm sure this is a stock which is not there in the FNO side. There's no question of shorting it. And if you're holding this, you should definitely have sold it long time back, or if not, sell it on Monday and wait for that base to form, continue the research, and at some point the chart will give you a signal to buy again, and that's when we buy.
Okay.
Right? Okay. Then Sadbhav. Where is this? Okay, so that's made a new life high since we saw it last. Big volumes on Friday, and MACD is also done a crossover, so that's something to keep a note of. So I think looks like Sadbhav has created a short-term top for sure. No fresh buying at all. And if one has the stock, I would stick my neck out and say one should be prepared to perhaps even sell it, especially if this neckline trend line is broken. And it's just about there, right? So be careful about it. This is the trend line from Jan. It took support there, and there's the Bollinger Band 21-day moving average. If 340 breaks, then I think one should just sell off Sadbhav. No question of buying fresh into it. And Just wait. A lot of activity that happened on Friday. What do these guys do?
Road construction.
Okay, fine. Right. So it's gone from what 250 zone to 400 almost, and then it's 355. Well, looks like just cool off at this point. It's wait and watch. If it's a question of buying it, I think one could buy it as a trader, not so much as an investor. 400 is going to be a psychological resistance before the next up move happens. Right. So I think now 350 is proving that psychological mark. So it's pivoting around that, but given the rounding top nature that you've seen and the MACD crossover you've seen and the high volumes on Friday, I would be cautious. Done. Are there any other stocks? Bharat Forge. Okay, cool. Anything else? Done for the day? Okay, so I think good long session today. The key takeaway again will be in this. I'll send this right away after we close the webinar, and once the recording is up, it'll probably take a few more hours to convert and upload. I'll send out the links also. But I think the bottom line is what has already been put up on this notepad here, and I think the take-home message, at least for me, is to go review the first part of today's talk and get a sense of time, perspective, proportion, and how long things take to actually pan out. And I think from a more high probability money making perspective, we really need to get a sense of that. Just want to also add that, so yesterday I had gone to Jagdish Ahuja's talk about algo trading. It was an excellent talk, really well put together. He did a fantastic job of automated algo trading stuff. Hopefully we'll try and get a recording of that in a week or two. But just wanted to summarize something from there, which is how high frequency trading, and I don't know, Kundu, you got access to SCRC. You could be the HFT guy for India for all I know. Is basically taking over ultra short-term trading opportunities intraday, and how human capacities and abilities are just not going to do it. And why I'm saying this in today's session, one of course, the talk happened yesterday, is that the short-term things that a lot of us get attracted to or get sucked into are basically being driven by algos. At least 30% of them, 30% of algo trading intraday is happening in India, and in US it's up to 60 to 70%. And the computers are just, you can't beat them. They're just a different species. They can do things we can't do. They can do things at a speed we can't do. The action is over before we even know it's happening. So what I'm saying is, I think there is a really good fundamental reason for us to make a conscious effort to get away from the short term and look at longer term multi-week perspectives and participate in the market like that. There's no point even thinking about competing with the computers. Like I said, Kundu is the only guy who could think about actually seriously doing that, and I think there's huge opportunity if someone like Kundu with with skills and technology and access like him wanted to do something. But go back to today earlier part and review that and get a sense of perspective. I think that will serve us really well in the long term, right? So great. So we'll close for the session. Thank you very much for your participation. Have a great rest of the weekend. And the mentorship group, we'll catch up at 7:30 tomorrow morning at BIC, right? Okay. So thank you and good evening.
Okay, thank you. Bye-bye. Bye-bye.
Okay.